Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look at the bull market. So here, actually, as we said, today's update on euro currency. Those of you who have watched for statement by Jerome Powell recently probably saw that he has spoken about the interest rates, but not enough to hold the upward action. So it was not enough comments, not enough hawkish comments to reverse the sentiment on the market. So he just said that they are keeping an eye on them, but it's okay. It's rising in interest rates is okay. And that actually, it seems that by the speech that he said, it seems that Fed wants to interest rates to see its growth a bit more and to make the situation become a bit hotter compared to what we have currently. It means that the recent reaction on the markets, it definitely will be temporal. And this is not a reaction that corresponds to the idea of the possible reversal of the dollar index back to its long-term target around 87.4. It's not time for that. So it means that we need to treat overall pullback as just a retracement and an overall bearish tendency. And it might be over at any moment because it provides just minor short-term relief to the market, but not strong enough to really make market to make the action in opposite direction. And actually, it keeps mostly the same sentiment as it was in the week before, when the Jerome Powell said that this is just the speculators' games and has no real relation to the real interest rates, and the Fed absolutely not worry about this recent rally on interest rates. Mostly, this is the same green line for more upward action on the yields. Actually, you already see the fruits of that. So take a look at the interest rates, what is going on right now. That was my reaction on the statement. Now situation canceled totally the potential free drive passion around this area. And it's climbing higher. It's already 173. And it's keep going. So it means that currently on the gold market, if you have traded recently, it's to upside. Currently, I wouldn't consider taking any long position by far. Because all the stuff that we discussed previously about the existence of the long-term target below market are still valid. Recent statement is not strong enough, so it's just a pullback and maybe it will be stopped right at 1750. So that's not really good background for taking the long position on the gold. For taking the short position, well, theoretically it is possible, because you can see market stands at the resistance. Interest rates shows a rally. And for the different chart, market mostly has completed the OP that we have discussed. Not quite, but stands very close to it, and now is reversed down again. This pace, due to the interest rates performance, you can see really significant. And on the hourly chart, you could see that is ready to go through the long-term support resistance area. It was resistance, market has broken it. Now it should become the support, market returning back inside the trading range below 1750, 1730 area. The confirmation here of the bearish sentiment and that downward action might be reestablished will be the broken of these lows. So if market will break this trend line down, forming the bearish reversal swing, in this case you could see this downside swing will be greater than the previous swing up. So it totally will erase recent action due to the Fed statement. This will be confirmation that probably market trends to go lower. And well, in this case, in some pullback, maybe it's possible to consider taking a short position. So, but current environment absolutely doesn't look not fascinating for taking any long position on the gold market. So that's what we have here.